There very well could be some confluent signals that are leading to an upside. Technical targets alongside psychological and statistical targets are starting to rhyme, and we have the calculated targets to go over. The type of price action at play is reminiscent upon other assets with larger fundamental catalysts. Welcome back to the channel on this early Monday. This is ARCa, and let's dive into ticker symbol NVOS. Let's kill them. What is up, you guys, and welcome back to the channel. Let's go ahead and dive in to ticker symbol NVOS. And what we're observing here is actually the falling wedge that we observed in the last thread of analysis that we put up. But I would like to first denote that we actually changed this up just ever so slightly, right? So, and the reason why is because of the current price action that has happened over the last couple days. And what I will say is that the downside that we were expecting absolutely hit one of the targets that the falling wedge had in the event to where we would run to a downside, right? So it definitely hit the middle of the triangle, which was right at about this. I believe it was set to be around 106 or 107. We got just below that, and it looks like we got a nice bounce to the upside. Now, the data that has now been collected over the last few days is incredibly important, right? So now let's just kind of go over here the probability, or actually, you know what, the targets in case this were to break out to the upside. Now, remember, just like this here, I want to repeat it again. This formation could be bearish too, right? But it usually favors the bulls, right? It's just that's just usually how it is, right? Falling wedge favors the bulls. Now, we are in an 8-hour time frame, which gives the formation some I would say some credibility here, right? Because we do observe these formations in larger time frames, and they do often play out, right? So in this case, there are 3 targets to go over, right? So 138 would be assuming that we would break out from let's just say that we were to break out here, right, on Tuesday, December 12th. That first target would be taken from the top side of the triangle right to the bottom from the area of breakout, and that would lead to a potential 138. Now, the second target would be the adjusted center of the triangle from the top side to the very bottom side of the formation, and that leads to 148. And you know what, we do have some pretty confluent targets that we've already been talking about from before, right? But this thread of analysis is pretty special. Please bear with me here, as there are several signals to go over, right? And I have ran a historical volatility backtest on this that will absolutely help in understanding what's happening. And the topside target being the very, very back of the triangle, right? Topside of the very lower part of the triangle. That leads to a potential target of about 172. I need you to remember this target here of 172. Okay, so now that we know what's happening here, I guess even in the moving averages, it would be very, very interesting that we're getting this 148 right where the SMA 50 on the 8-hour time frame could land, and it is a very bullish thing, right? That we would come back and test that SMA 50. So in the event where we did blast off here to a potential of a 148 target, that could actually lead to the potential pullback here to start validating the break of the EMA 21 and the conversion of this regression here from resistance into a support before continuing on to the upside. And that's looking pretty good, not bad, right? And now let's go ahead and take a look at the following chart here, because I would really like to show you this formation now, right? So this formation is actually displaying to us a descending broadening wedge. Okay, so what I'm going to present to you here is actually something that happens a little less often than not, but the reason I'm making this video is because of how much there is here, right? So first of all, this is a 6-hour time frame. We, on the previous chart here, we were definitely on the 8-hour time frame, right? And it's very similar. One more thing to notice here, actually, before we go back, is that we have printed a very, very significant iteration here of and this is an 8-hour bullish engulfing candle formation, right? So we're looking at here the green candle, the forward green candle, completely engulfing the prior red body, right? So that is already indicating a potential growth in price action or some type of psychological reversal or continuation to the upside, right? So yeah, let's go ahead and go back to the next chart here and observe what's happening, right? So aside from the falling wedge that you saw with the tail end of a bullish engulfing on an 8-hour time frame, this is another bullish formation in at play, and this is a descending broadening wedge, and it is playing by the rules correctly, right? So we have test number one of the resistance playing alongside the golden rule of three. Test number two of the resistance, test number three, we have a capitulation here, and now we're getting ready to accumulate here into test number four, which would be technically a true breakout test. Now, what's interesting beyond that is actually this. So we are definitely observing here an inverse head and shoulders too, right? So we're just gonna go ahead and point out all the little colorful things here, right? And little little formations that are given to us in the kindergarten books for stock trading, right? So yes, we definitely see an inverse head and shoulders at play, and with pretty interesting target, right? So the way we acquire the target is by taking a trend line from the very top side of the formation to the very bottom side of the head, and then you apply it to the center of the right hand shoulder. And guess what target that gives you, right? So that gives you a target of 184. Now that 184 happens to be a target that's right above what? Well, the take profit target for this formation is located at 172. And if we just go ahead and look back right over here, the take profit for the falling wedge is 172 as well. So very, very nice. We definitely have this confluent. Now, if we return back to the other screen, we'll notice right over here that 172 is absolutely in line with the 1.272 Fibonacci retracement, and this actually does give it some pretty high relevance, right? So now the take profit from the from the inverse head and shoulders is definitely this 180. What was it? 184, which is dangerously close to the top side of the 1.618 golden mean at $1.92. So if in case price action did make its upside to this, oftentimes price action tends to reject right at the take profit, or it tends to make a quick break into the following upside target, which could very well be a 1.618, before coming back and starting to validate the the resistance conversion of the take profit from the broadening wedge, right? So this is what you would call, well, I guess I'm just gonna, because in all technicalities, I don't think that in the previous chart, this formation here is going to be responsible for the breakout. I still think we still have a little bit of time here, particularly because of this SMA 10, the 10-day simple moving average very well could face 2 times the resistance, since it is so close to the resistance regression here. So we would have 2 times the resistance, not even including the EMA 21 that's right up there on that 8-hour time frame. We would definitely pull back here and see about reloading anywhere between the zones of about 122 to, I'd say, about let's see. Yeah, I'd say about 125. That could be an area for us to kind of retrace into. Now, if there is a further downside to this, then I think we would actually have to speculate on these targets here, right? That would be 116 to 118 potential retracement from there, right? So now please focus. Yeah, that's right. So please focus here on the falling wedge, right? Now let's go ahead and go back to the other chart here. So falling wedge, we have the bullish, the descending broadening wedge, right? And we have the inverse head and shoulders, right? So, I mean, what you're observing here is actually a bullish tri formation, right? So we definitely have all three at play, and they are all suggesting similar targets, all within each other, right? So, and actually, the inverse head and shoulders is one of the most typical formations to be used within breakout from a descending formation, and it's about to play. One more thing that we want to take into consideration here is that, as you can see, this last 6 hour candle iteration is bouncing. Where? Where is that bouncing? Well, let's go ahead and point this out right over here. This is called the golden pocket. The golden pocket in Fibonacci, in the Fibonacci retracement tool, it is between the 0.382 Fibonacci ratio and the 0.618. And we are currently bouncing within this range here. That is 100% bullish. This combined with the inverse head and shoulders, the broadening wedge, the right, the triangle being the falling wedge. My goodness, you know what I mean? It's just it's stacking up pretty nice. So I will go ahead and point out here, team, that the last 30 seats are starting to take they're starting to get taken up here. So I offered one more set of 30 seats to the ARC Masters trading course, right? So please go ahead and get in touch with me here, because I will not repeat this course again. I've already done it. I've already done it for 3 tracks, and the third track just started 3 weeks ago. And unfortunately, there was not enough space to fill everyone there for the third track, so I offered the fourth track to continue and finish it off. And as of late, there has been kind of a surge of more attention here. So please go ahead and get in touch with me here at the ArcMasters course at gmail.com, as this is going to be my last 16-week mentorship for stock trading. Okay, you guys. So definitely get in touch with me there. Reserve your seat. Let's get a good start to the 2024 year. Okay, team. So let's go ahead and now move on to the next chart here, as I do believe this is going to be one of those charts that you're just going to be like, what the heck did he say? And how is that even possible? Well, let's go ahead and pull it up now. So this is the statistical chart, right? Using volatility versus stochastic momentum on a 3-day time frame here. So I have measured a certain criteria. Anytime that volatility has expanded right up here into the critical expansion zone and started a contraction zone from this critical point, paired alongside stochastic momentum with an upside pivot, I have taken note of every iteration where that has happened throughout the entire trading history on the 3-day asset, on the 3-day time frame, of the NVOS asset. There we go. Okay, so now what you have here is actually the normal curve, right? So if you're familiar with statistics, this is the bell curve, right? And this is, just to give you where the probabilities land. So I have calculated that iteration, right? So every single sample set is here to create this data set. So out of 24 total iterations in the 3-day chart, 18 have been guessed correctly to the upside with a setup that is about to fire off. Now, that is giving us an average upside accuracy of about 75%, with an average upside thrust, aka your mean, of a massive 175.54% over the span of about 26.17 days. Now, I have also calculated from this mean, from that data, from these samples, right? I have also calculated the standard deviation. The standard deviation here, which is located right within the 68% of the results of the standard curve here, that is actually measuring about 190.56% to the upside and this would be from the firing of the signal. We're almost there. Okay, now beyond that, just so that we can get this a little tighter and see how well we can get the targets to meet here based on this criteria, I have calculated the upper and lower bounds of the first, second, and third standard deviations as well for us to review. Okay, team, so let's go ahead and just go over some of these targets, because this is it is very curious to see the upper bounds of these targets, right? So in the previous chart here, this is something that I was looking at from okay, yeah, when we were actually looking at this back in July, or I think somewhere, yeah, back in July, somewhere maybe even in June, we noticed that there was a right angled triangle, right? So the right angled triangle is actually bullish formation and does indicate a potential upside. And we did note down the targets of higher probability. We said it would be 245 from the break of around 104. We definitely got that very tightly. That is the top side of $2.50. The next target that we were looking for was actually a resistance of about $4.04, of which price action ended up going to a top side of about $4.28 before the next day, or the next buy daily candle, moved up all the way to 542. So this analysis definitely worked out very nicely for us. And I think that, yeah, that was all pre-split. And so the reason why I bring this out here is because we had areas of previous resistance in line for us to evaluate, right? So now if we take into consideration the statistical target being at least the mean, the upside thrust here, 175.54%, well, you can see here that it would actually take us to the very top side of where the triangle even started, and which is around 336, right? And also from the capitulation here, this was the resistance that we looked at before actually falling all the way down there. So and yeah, so we came back and tested it while creating this triangle here, right up here. So that is very, very interesting that we would be getting a target that close, right, team? So um I know that this is sounding entirely bullish here, but that's just because the odds are stacked towards the bulls, and I really don't care about direction, and I will say it the way it is. I don't care about. I am an ambidextrous trader. I will certainly trade the upside and the downside. I am short and long biased, team, by training, and yeah. So let's just go ahead and continue the analysis here, because there are several targets to look at too. While I do feel a bit uncomfortable on speaking about even the standard deviation of 190.56%, I think it is at least. Uh, yeah, it's at least appropriate to talk about a little bit of that, right? So 190, right around here. So very curious that we would be getting that 190% directly to the top side of this candle here. Right, and the 175% would be this candle here where we came back to test it, right? Very interesting now that we're getting two critical high candles here, right? So yeah, so at least we have those in consideration here. And you know what, these previous resistances, know for a fact that I'm putting these targets here for the first time like ever. Right, so these resistances were already there from our observation from this previous play. Okay, so I'm not applying these as like a brand new thing here. Okay, team. Just know that that's really what I mean here. It's kind of insane. All right, so let's just go ahead and take a look at the rest of the targets here. Right, you can see here an upper bound of 366, an upper bound of 556 and 747. Right, we'll go ahead and go over those later as we move on. So now looking at the RSI for the immediate short term, definitely coming up to a very nice support here in the 30-minute time frame, suggesting a continuation to the upside. And so is the 8-hour time frame. There appears to be a little bit of danger entering the larger term, though, 12-hour into the daily. That while the daily is still showing us that we have this upside probability, especially since we are in the gravitational zone of the bear strength percentile, this can lead to a continuation to the upside here. And then that could actually give us a little bit of resistance if we move on to the buy daily time frame. There you go. So the buy daily time frame is displaying a little bit of resistance here before a pullback. So we would have to be very careful as to how we proceed here based on that. And that is the reason why I said earlier that very likely for us to find the resistance of the SMA 10 and the regression here from the triangle as far as a resistance, and then we would actually pull back into these zones here. Okay, so that is rhyming very nicely also, right, with whatever we were talking about here within the within momentum and the RSI. So it looks like the monthly time frame, oh, I'm sorry, wow, no, it would be the biweekly time frame, right? So the biweekly time frame here is showing us that we are actually finding support and there could be a continuation to the upside overall. So this is pretty interesting, and the fact that we still have about 4 days and 13 hours to close this bi-weekly here is completely bullish. There's going to be definitely some things to consider here for us in the near term. I mean, I'm not the biggest fan of assets that have this, micro floats and micro cap, right? It's a little dangerous, but it's important for us to observe it anyway. So the last thing here I wanted to mention is that we are absolutely growing here a drive of hidden bullish divergence, and that is actually created. That is actually, I'm sorry, this is a drive of regular bullish divergence, and that is actually created with the opposition of price action versus momentum. And you can see here that price would have to create a lower low, and momentum would actually have to create a higher low. And you can see here we have a low printed right down there at this candle, and we have a high printed right at this candle here. So very interesting there, and you can see it clearly that we actually have this divergent drive, right? So that is definitely very, very, very bullish, considering the larger term time frame of which it's about to validate. In 4 days and 13 hours, it's already printing. So it is looking very, very, very good here, team. If any questions or concerns, definitely get in touch with me. Know for a fact that this can also play to the downside, okay? This can trap people. This can get some, there could be some danger in the market, okay? Just know for a fact that the odds are stacking against the bears here, but there is always that chance of failure, okay? I just need you to be very, very, explicitly careful over what could be happening here, okay? Just one more little thing I wanted to share because I just noticed it right now. Please note here that the top side resistance of this is $1.39 if we were to face it, for example, tomorrow, right? So that 139, guess what that rhymes with? Well, that's right, the breakout candle. It would be right around here, we were saying, right around here. Look at that, $1.38. What do you know? So yes, complete package of rhyming targets here. But yeah, team, I think this is a pretty good place to leave off. Remember to reserve your seat and we'll get you situated, right, team? So here we go. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well. A very, very good rest of your night, actually midnight, and I'll catch you at the bell mañana. Adios. Yeah.